Gas prices globally have been on the rise. In fact, they've more doubled in the US last year. But how does this impact Indian consumers? And does this mean that gas prices are here also to set to rise? Somit gets an explainer. Somit.
Well, year to date, if you see, gas prices around the globe have increased considerably. Now, in the US market, gas prices have increased by nearly 137%. In the European market, it has increased by nearly 124%. And in the Asian market, it has increased by nearly 83%. So, how does this international gas price rise impact Indian consumers? Well, at this point, the impact on Indian consumers of this higher gas prices is limited. And that is because the gas that we use for vehicle and for domestic use is administered and controlled by the government, and it changes only once in every 6 months. So the first revision happens in April and the second revision happens in October of every year. However, the gas that we use for industrial and commercial purpose, now that gas is sourced from the open market, and the prices of that are linked to what the international gas prices are. However, for that also, if you see, Indian government or the Indian companies have long-term contracts, the prices of which are much lower than what the international gas prices are at this moment. However, given the fact that international gas prices have been increasing and prices are expected to increase for the controlled gas price that the government sets also from the 1st of October. Now, the new prices that the government would set from the 1st of October would be based on the pricing formula, which considers the market-linked prices in the US market, the Canada market, the Europe and the Russian market. Now, given the rise in the international gas prices, even in India from 1st of October, the prices are expected to increase, and analysts are expecting these prices to increase by nearly 56 to 64%. Now, for the first half of FY23, the gas prices stood at around $6.1 per mmBtu, and this is expected to rise to around $9.5 to $10 per mmBtu for the second half of financial year 2023. Now, whom will this rise in gas prices impact? Well, it could firstly impact the city gas distribution companies negatively, because it is unlikely that at this moment they'll be able to pass on the entire benefit or this entire cost of rising gas prices to consumers. And if they are not able to pass on this rise in gas cost to consumers, then their margins could halve in the second half of financial year 2023. However, on the positive side, oil explorers like ONGC, Oil India, Reliance Industries and Vedanta stand to benefit, because the rise in gas prices will lead to higher realizations and higher profits for these oil explorers. However, there's a possibility that the government might look to cap the gas prices from the 1st of October. Now, what the street is expecting is that the government might look to cap these gas prices in the range of around $6.1 to $6.5 per mmBtu, which is very close to the current prices. And if that happens, then it will be a big positive for the city gas distribution companies, because they will not need to pass on this impact of higher raw material prices to consumers, and the margins would remain stable. However, it would have a sentimentally negative impact on ONGC, Oil India, Reliance Industries and Vedanta, because their realizations would be capped, which would mean their earnings would also remain capped for the second half of financial year 2023.
Right, Somit, but could you just give us more details on how do higher gas prices impact gas companies and Oil India? What is the impact on these companies?
Well, generally, if you see higher gas prices or higher gas prices in the international market on oil explorers like ONGC, Oil India, Reliance Industries and Vedanta, the impact is pretty much neutral, and that is because the gas prices in India are controlled and administered by the government. So there is no direct impact of or direct positive impact of this rise in natural gas prices. However, for companies like GAIL, the impact is mixed, because this higher spot gas prices in Asia does positively benefit their gas trading business, because higher gas prices in the Asian market or in the spot market does lead to higher profits for the gas trading segment. But higher gas prices also leads to lower gas usage in the country, which thereby negatively impacts the gas transmission business. For city gas distribution companies, as discussed earlier, the impact is marginally negative, because the total blended cost of gas increases, because only 91% of the gas requirement is sourced from this controlled gas prices that the government sets out. For the 9% of the gas requirement, they have to source this gas from the open market. So the total blended cost of gas increases. So it's marginally negative for the city gas distribution companies. For Petronet LNG, it's kind of negative, because higher gas prices leads to lower demand for imported gas and hence lower regasification volumes for their terminals, which lead to lower earnings for Petro and LNG. And lastly, for another gas transmission company like GSPL, it's kind of negative because it leads to lower demand for imported gas in India, which leads to lower transmission volumes and hence lower earnings for gas transmission company like GSPL.